Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and on this special edition, we're going to be discussing how the Sensex has hit the 70,000 mark for the very first time and absolutely what lies ahead of it. What is really driving the momentum in the markets and this record rally? Will the long-term momentum sustain? And what should you as investors do at these record high markets? Should you book profits or should you actually invest more? That's something that we're going to be discussing. A very, very special guest is joining us on the show. Mihir Vora joins in. He's a Chief Investment Officer of Trust Mutual Fund. Mr. Vora, welcome to Business Today Television. What a day to welcome you on Business Today TV. Historic run on D Street really continues. It's the first time that we've seen the Sensex crossing the 70,000 mark. Your first thoughts?
Good morning, Sakshi, and congratulations to all of us and your viewers for being here on this day to see this milestone of the Sensex. I mean, while it's just a number, 70,000 is just a number, but it does feel good to have traveled the journey along with the markets for so long. I remember when I started my career, the Sensex used to be around 4,000. So from 4,000 to 70,000 feels like a long way off.
That's wonderful to hear. From 4,000 to all the way up to 70,000. Clearly, you've seen the Sensex go through all the ups and downward cycles, and you've been in the markets believing in the long-term story. And, a lot of investors may now be thinking this fresh record highs, dizzying heights at which the markets are now trading at. What exactly should be investor strategy? Should one gear the courage and, should one gather the courage to invest more at these 70,000 levels in the markets, or should one really look at profit booking? What are you suggesting your clients to do?
I would suggest keep looking at stock specific and sector specific opportunities. I don't think there needs to be any classification done as to what a large cap is or mid cap is or small cap is. Ultimately, valuations are valuations, earnings are earnings, and the rules that apply to large caps do apply to small caps and mid caps also. So if you're looking at a stock with attractive valuation and growth, it does not really matter whether it's a large cap, mid cap, or small cap. Having said that, in the last few months, the pace of the rise has been quite sharp. So to that extent, some of the stocks have overshot their long-term growth potentials. So one does need to be careful and selective while making investments. So I think if you have a regular investment plan running like a systematic investment plan or insurance premiums that need to be paid, I would continue with those plans. And if you're doing your individual stock picking, then I would say don't compromise on quality, don't compromise on liquidity, because it always, when the markets are moving so fast, there is the temptation to chase the next new thing, but you can end up getting trapped in some of the low quality stocks. So be selective and stick to the fundamentals and quality parameters.
Okay. Mr. Vora, also tell us, what are the factors that you believe are behind this record run in the markets? And do you see these factors supporting the markets even at these levels going beyond into the new year?
Sure. I'd say three or four key factors. One is, of course, the fact that we are coming off the low base of the pandemic and we still haven't reached our long-term trajectory of growth from the pre-pandemic level. So we still have some catching up to do as far as demand and investments are concerned. So that should continue for the next 1 year or so. Second is, I think, pre-pandemic, the buildup of domestic savings into equity markets through SIPs, mutual fund investments, insurance premiums had started, but I think it's only accelerated in the last 2-3 years. So we have a very strong foundation of flows in terms of SIPs, insurance premium, NPS and EPF investments coming into the equity markets every month. About 20 to 22,000 crores of money through these channels are coming in. So that's really providing a good support to the market. I think these are structural long-term flows, granular retail flows, which is important. And third is, I think, the global factors. In global factors, I think the peak of interest rates probably are past us. So the tightening that we saw and the dollar strengthening that we saw, which led to FII outflows, is maybe past us, and we should begin to see FII inflows into the country on a more sustained basis, which has been the long-term trend in any case. And the second factor on the global front is that China is no longer a very attractive destination as per many global investors. So if you look at a large growing market, I think that leaves global investors with the option of only India. So that's, I think, also a good tailwind for us.
Fair enough. You know, a lot of investors may now be thinking, you know, Sensex has hit 70,000, but now what next? Do you think that the 1 lakh mark on the Sensex really now looks approachable, at least for in the foreseeable future? Where exactly are you seeing Sensex go forward from here?
See, as I said, while 70,000 is a good number, it's just a number, right? And 1 lakh from 70,000
Yeah.
is probably about a 50% or a 45% upside. And 45% upside
Yes.
is probably 3.5 years of, the compounding at about 12%. So it's not a big deal, I would say.
Hmm. Okay. And, you know, at this level also, since you talked about, of course, one has to be cautious and keep a stock-specific approach as well. But which are one or two themes that you really believe that in the next leg of the rally, till the time, say, Sensex goes from 70,000 to 80,000, what are one or two key themes that you would be betting big on?
I think clearly infra and manufacturing as broad themes, including real estate. So broadly, the private sector investments, government investments into physical assets, and the manufacturing from India themes are these are the things that are likely to continue. The weak spot has been
Hmm.
consumption, I would say, especially the lower end consumption. So if that kicks in, then the valuations are attractive in the FMCG space and some of the space which cater to lower end consumption. So I would say lower end consumption needs to catch up, but the drivers will continue to be physical asset creation in manufacturing, government capital expenditure, as well as private sector capital expenditure, including into real estate.
Okay, and then very, very interestingly, you pointed out, and I was going to ask you that, say, for example, if a fresh investor really comes to you, a young and first-time investor says that, sir, I have 10 lakh rupees and I really want to invest that now, where would you tell them and how would you tell them to invest the money now?
Yeah, I'd say that you have a good mix of stocks, but the broad theme, as I said, to play is mostly on the domestic side. The domestic economy is
Yeah.
doing better than the global economy. So the sectors that we mentioned, which is infra, manufacturing, etc., real estate, and of course, this all cannot work without financials. So when the GDP grows, typically the financial sector grows at about 1.4 times of GDP. So that again is a sector banking and NBFCs can do well when the economy is expanding.
Okay. And, you know, of course, this space, you did say that, you know, it's better not to look at the large, mid and the small cap baskets as separate. But I wanted to understand, you know, this entire year so far, we've actually seen a phenomenal performance in the mid and the small cap space. Over 30%, 30% of a surge has already come in. Do you see these pockets now looking a little toppish at this point in time? Or do you think that the outperformance could actually continue even going forward?
See, at the index level, things are looking a bit expensive in absolute as well as relative terms. But especially in small caps, there is a large number of stocks, so we can't really generalize because the index typically has 100 or 150 stocks in the index, but there are like literally 5 to 700 stocks in the small cap space, which are all in the a lot of them are in the faster growth segments. So there is scope for stock picking, but yes, as you mentioned, compared to say 6 or 12 months ago, the opportunities have reduced.
So the opportunities have reduced. Are there any pockets that you've identified where investors should actually stay away from, where it's actually touched, you know, the high point and perhaps saturation point is there?
Uh, so I don't think there is any sectoral bias here, but I would say that look at the free float of the stocks. There are many stocks in the private sector as well as the public sector which have very limited free float, and those stocks are going up too sharply. And when they go up sharply, they can end up falling also very sharply. So look, just be careful about stocks with limited floating stock because that's where you can get trapped.
Right. You know, I wanted to understand about the other outperforming pockets which have really outperformed after a long haul. You know, stocks from, say, the PSU banking basket. These stocks were hardly on investors' radar, and the way they have outperformed has surprised everybody, even the PSU stocks at large. stocks in the power space, defense space, railway space as well. These have been pockets that have been real outperformers. The kind of wealth they have created this year is something to be really noted about. But can they continue in this momentum is the big question. And should anyone, even at these levels, hazard a buy here?
Sure. So in banks, I think there was a there was a case for catch up versus the private sector banks because in the pre and post COVID couple of years, I would say the private sector banks really outperformed, and the valuation differential between private and public sector banks was too stark. So in the last 12 months, we have seen a certain amount of catch up happening for the PSU banks. And to their credit, a lot of the PSU banks have capitalized themselves well, cleaned up the cleaned up their books by doing good amount of write-offs and raising capital. So I think there was a case for valuation catch-up in any case. But I don't think in the long term PSU banks will outperform the private sector. In the long term, I think private sector banks will continue to outperform. So I think that there was a tactical play and which is being kind of executed as of now for the banking space. On the other segments that you talked about, which is defense, power, etc., including finance, power finance, power financing companies, etc. I think these are, these are themes which are relatively new, and these are themes which have developed because of strong government intent and support to these segments. Whether we are talking about defense manufacturing, or we are talking about railway capex, or we are talking about renewable trust, etc. So these are things which have started in the last 2-3 years and which have a long way to go. So I would say that these are things which can be sustained over the longer term also.
Sure, fair enough. Thank you so much, Mr. Vora, then for speaking to us on this very special edition and sharing with us your thoughts when the markets are touching these record levels, and explaining to our viewers what exactly is the strategy that they must follow at record high markets as well. Always a pleasure having you with us on Business Today Television. Congratulations yet again, and see you very soon on another edition of Business Today Television. With that, we'll wrap up this special edition, but do stay tuned as we continue to monitor more trends in the stock markets to tell you where exactly is money being made and where exactly should your focus be as far as money-making market strategies are concerned. Many thanks for being with us on this edition.
Good evening, and